Welcome back to the channel. Today we're going to uncover something that has been developing right under everyone's noses in the crypto space. The internet computer ecosystem is quietly building up a situation that most people have not fully grasped. Raw social media, on-chain data platforms, developer channels, and technical analysis threads. When you connect all these pieces, a much bigger picture starts to form. One that shows ICP might be entering a phase where the market will have no choice but to reevaluate how it's valued. This video takes you through the supply dynamics, whale behavior, technical structure, and ecosystem catalysts that could play a major role in shaping ICP's next big move. This video is for informational and educational purposes only. It is not financial advice. Always do your own research and consult a professional before making any investment decisions. The first major point that has to be understood is the real supply situation. Recent breakdowns shared by analysts show that only about 340 million ICP are actually circulating in the liquid market. Everything else is staked, locked, or committed for long periods of time. That means the available supply is far more limited than most traders think. And this is where things start to get serious. ICP's system burns tokens when canisters consume cycles. The moment the network begins burning more tokens than are being produced through staking rewards, ICP transforms into a deflationary asset. When deflationary pressure meets consistent demand, the price structure tends to shift dramatically. This isn't some theoretical long-term forecast. It's something the network is inching closer toward as development activity grows and canister usage expands. Now let's move on to what traders are watching. Not long ago, a well-known crypto analyst pointed out that open interest metrics had ICP valued around $18 just a month back. For many people, that level represents the first significant milestone. But beneath the surface, a much more ambitious set of targets is circulating. A lot of traders are eyeing $35, while others studying long-term cycles are even talking about the possibility of three-digit valuations if conditions align. These projections aren't random guesses. They're rooted in supply constraints, expected ecosystem usage, and historical patterns that show how assets behave when demand and scarcity move in the same direction. Whale activity adds another layer to the story. Data from multiple on-chain monitoring sources shows that humpback whales, the largest holders in the ecosystem, are steadily increasing their positions. At the same time, more tokens are appearing on centralized exchanges. Normally, rising exchange balances can look bearish, but in this case, the interpretation is different. As trading volume increases, exchanges begin filling their hot wallets to handle higher liquidity needs. This usually occurs ahead of heavy market movement. Instead of whales preparing to dump, the data suggests that exchanges are gearing up for a wave of activity they expect to come. In other words, they're preparing for something significant. When analysts attempt to model ICP's potential paths, they generally identify two main outcomes. The first scenario, which carries around a 75% probability, predicts that ICP continues forming a strong long-term trend supported by improving momentum. The second scenario, with a 25% likelihood, suggests that unexpected market behavior, usually tied to Bitcoin volatility, could temporarily disrupt things. However, regardless of these probabilities, the most interesting signal emerges from the monthly RSI, which currently sits near 20. That is an extremely low reading with massive space to expand. A move into the upper RSI bands, closer to 80, would historically align with a strong rally capable of carrying ICP above $40. These aren't emotional hopes. They are calculations based on how the asset has reacted in previous cycles. Still, every honest analysis must include the one factor that influences the entire crypto market: Bitcoin. There is always a third possibility in which Bitcoin experiences a sharp downturn, something like a drop toward 80,000 during a volatile phase. If that happens, the entire market, including ICP, would follow the broader movement. ICP is strong fundamentally, but it isn't disconnected from Bitcoin's gravitational pull. Outside of that risk, though, the overall trajectory that ICP is forming looks stronger than it has in a very long time. One comparison circulating in the crypto community is that ICP today resembles Amazon in 1997. At first glance, this might sound exaggerated, but when you look deeper, the comparison becomes understandable. Back then, Amazon had a vision that sounded impossible to most people. The idea of building an everything store was mocked and dismissed, but Amazon's execution was incredibly methodical. They didn't try to impress people with hype. They simply built and iterated until the world slowly realized how big the vision actually was. ICP is following a similar path. Its mission seems too ambitious to traditional industry thinkers, yet step by step it continues executing. The irony is that transformative ideas always look unrealistic until they finally begin working, and by that time, the early entry window has already closed for the majority. Now let's get into the technical levels that traders are watching closely. According to recent chart studies, ICP might still test the $5.50 region, which lines up with the 0.382 Fibonacci retracement. But if the market resumes its upward momentum, the next major upside target sits around $14.20, aligning with the 1.618 Fibonacci extension. Beyond the prices themselves, there's another crucial factor strengthening ICP's case: its extremely high Nakamoto coefficient. That metric measures genuine decentralization, and ICP consistently ranks near the top of the charts. Few blockchains can claim decentralization backed by verifiable data, but ICP can. If ICP breaks the resistance zone around $6.75, it could trigger a wave of renewed bullish momentum. And now let's look at the latest market movement. Over the past 24 hours, ICP climbed nearly 5%, but the weekly time frame paints an even clearer picture, showing gains of almost 24%. These aren't small fluctuations. They reflect real momentum building. The token is currently trading near $6.40, with strong trading volume surpassing $500 million. Analysts have also identified a clear accumulation zone between roughly $6.02 and $6.31. Accumulation zones typically form when experienced investors position themselves before major market moves. If the price manages to break above the resistance, sitting between $6.42 and $6.45, the next target becomes $7.50. Above that, the rounded moving average near the 7 to 7.3 range, likely connecting to the 200 EMA, becomes the next major hurdle. A decisive break through that region could lift ICP into the $8.38 to $8.54 area, a historical zone where supply has previously slowed progress. As long as ICP remains above $6, the broader outlook stays optimistic. A drop below that region could create short-term turbulence. But for now, the chart structure, volume flow, and accumulation patterns all support the possibility of further upward pressure. Now let's turn to what might be one of the biggest catalysts that people still aren't paying attention to: the Caffeine and WordPress integration. Most people don't realize that WordPress powers around 43% of the entire internet. That's not a prediction. That's the current reality. If the internet computer manages to capture even 1% of that market through its integration, that would translate into roughly 4 million canisters running on the network. Each one of these canisters requires cycles, and cycles are created by burning ICP. More canisters mean more cycles burned, and more cycles burned create stronger deflationary pressure. This forms a powerful economic cycle where increasing adoption directly strengthens the tokenomics of the ecosystem. This isn't a distant future scenario. It's unfolding right now, and its effects will compound over time. In addition to all of this, ICP continues to show signs of stability and recovery from a technical standpoint. The price has held steady around $6.36, and the accumulation activity indicates that experienced market participants see value at these levels. Combined with the broader uptrend forming on the weekly chart, the current structure suggests that ICP may be setting the groundwork for a meaningful breakout. To wrap everything up, ICP is shaping a setup that combines limited available supply, increasing whale accumulation, improving technical strength, and rapidly expanding ecosystem development. The deflationary mechanics are gradually becoming more relevant as network usage grows. Meanwhile, the integration with WordPress has the potential to onboard massive numbers of users and canisters into the ecosystem, both of which directly support the token's value structure. Despite short-term price movements, the long-term picture continues to strengthen. The market hasn't fully recognized what's happening yet, but the window of opportunity won't remain open forever. Keep watching ICP closely because the conditions forming right now have the potential to become extremely significant. So, what do you think about ICP's current position? Are you bullish on its growth in AI and DeFi? Drop your thoughts in the comments below. If you found value in this deep dive, don't forget to hit that like button and subscribe for more breakdowns like this. Thanks for watching. Stay curious, stay cautious, and I'll catch you in the next one.